Good afternoon, this is Brad Dennis with BIS Commodities with your weekly wrap-up for the first week of October. Start off with the grains. We have grains slightly higher this week. Last Friday, as you remember, we had a quarterly stocks report came out. After that quarterly stocks report, they tried to press it lower, couldn't, so we've seen a little bit of short covering since then, and we ran into some solid resistance at 350. Now, grain traders are going to be waiting on the USDA on Wednesday with their supply and demand report. This week we did see good numbers on sales for corn, but the bulk of that was out of Mexico, who made one big large purchase. So going forward, we've got to see this demand still be around, and with the notion that Brazil is letting in certain GMOs, that's telling us that they'll be going after probably a little bit of U.S. corn down the road. How much we'll have to find out down the road, but there'll be plenty of it. Harvest seems to be going well. Seems to be yields are hanging in there. They're not blowing the roof off the bin, so to speak, like beans, but they're at some record levels. So decent yields on the corn crop. Probably talking about 330 to 350 as long as we get a neutral report on Wednesday out of the USDA. Over in the beans, we're slightly higher today. For the week, we've seen good yields, or are hearing about a lot of good yields, and that's bringing optimism to the market. That optimism is looking at ending stocks next Wednesday to maybe bump up about 50 million, go from about say 365 I think last month up to about 415. Demand was good this week, as we saw in export sales, but it always is good the week before China goes off on holiday, and actually we've seen better demand the past years before this break. So we'll see how that all kind of plays out, see if they have to come back and really go after getting some cargoes tied up. But for the most part, there you're about 935 to 990, give or take a nickel on the beans until something different happens. Now, at the USDA report on Wednesday of this coming week, we probably will see an increase in yield. It's just a matter of how big is that yield increase. I think the trade will be a little disappointed if it's not over 52 bushels per acre. Good weather for the next couple days, or next week to 2 weeks out there, warm and dry. It'll allow a lot of guys to get in, finish up some harvest, and get a good chunk of harvest done. And once we get to the tail end, then we'll have to see if that if those extra bushels go in the bin, or if they go on to the cash markets. Outside markets, we've seen a good rally in oil today, or for the whole week. That's basically stemming from OPEC talks last week, where they actually agreed on an output decrease. It's still yet to be seen how big that decrease will be, or the limitations on production. And until it's done, I don't think that you can really take this thing too much higher than what we've seen right now. You have rigs still coming online in the U.S., so we're expanding that. We had two of the largest oil reserve findings over the past 2 weeks too, one in Texas and one in Alaska. So we're not short on oil at all. It's just the market had to see some short covering because of the OPEC meeting, and actually seeing a little bit of agreement out there. As far as the economy goes, non-farm payrolls came out today. They were at 154,000, a little bit less, about 20,000 less than what they were expecting. But if you look at the private payrolls, they came at 167, and everybody was expecting 170. So that's positive. The participation rate went up, and that's probably why the unemployment rate went to 5% today as well. After the numbers came out, the Fed Governor Meester was out. She was saying that, hey, it probably is time for a rate hike. So I think people are going to lean that way. The numbers aren't fantastic, but they're not terrible. So that's the way that they're going to lean going into the end of the year. Hard to believe that we're getting close there, and we're in October already. As far as livestock is concerned, hogs made new lows for the move this week. Last week we had our hogs and pigs report, showed expansion, so weren't really surprised by that sell-off. Matthew is heading up the coast, and Smithfield has shut down one of its biggest packing houses out there, so that'll back things up a little bit too. So I don't really see any relief for the hogs quite yet. Whereas over in the cattle market, we did test lows and were able to rebound some. Packer margins are very good still, even though boxes continue to come off some. The margins are there, and there's plenty of cattle out there right now, though. And trying to find that equilibrium, so to speak. I think you're also looking at good export demand on the cattle. Now, the one red flag, though, is that good export demand is because the dollar has been a little bit weaker, and this whole week that dollar has surged up there. So kind of keep an eye on that to see if that limits demand on the way. If a rate hike starts getting built into the macro or the bigger system, does that take away from exports going on down the road? And if that's the case, don't want to see cattle follow hogs to the downside, but definitely could be the case. So that is a brief update of what happened the first week of October here. If you have any questions about these markets, give us a call here at BIS Commodities, 1-800-373-2525, or look us up on the web. End of report.